Homework for today, which is really important. It's something that you should already have. But if you don't have this, then definitely create a comprehensive trading plan. Use this time when the markets are quite thin in liquidity. Use this time where you might have some time off work. Use this time wisely to review your trading plan. So if you've already got a trading plan, maybe consider one of these points. Maybe some of these points 1 to 10 is something that you haven't considered yet. So in your trading plan, you should be able to define your setup clearly in a checklist format. So if you've got several setups like I do, I've got 3 main setups that I trade. And so each one I have a checklist for. So depending on what I'm going to trade, I only trade these 3. I can probably recognize, let's say, around 20 or 30 setups, but I would only trade 3. And that's just based on my experience. And so that's my trading plan. Only trade these 3 setups. The rest, ignore. Even though I can understand, if I see, let's say, a double top or a double bottom breakout, and you got the double bottom breakout and then the retest, that is a setup. I can see it, but I don't trade it. I don't trade the double bottom retest or a trend line break and retest. I don't trade that setup anymore, right? Why? Because it's not my prime A1 setup anymore. Another point is, do you know what confluences you want to see? This is, again, going to help you with those checklists. Where is your stop loss placed and why, right? You need to understand why you place your stop loss there. Is it because you feel like putting your stop loss there? Or is it because your stop loss is there because it completely negates your trading idea? You need to aim for a stop loss that completely negates and invalidates your idea, because that way you know you are 100% wrong, and that's okay. And again, with your target should be very objective. And the more objective it is, even as a discretionary trader, it needs to be quite a mechanical exit. So if X, Y, and Z occur, exit, or exit half the position. Why? Why do you do this? Understand why you are exiting. So the exit of a loss should be treated equally of importance to your exit in profit. An exit is an exit. You need to know where you get out and why you get out there. Number 5, at what point do you move your stop loss to break even? So this is good to preserve the capital, protect the capital. I know some traders who never move their stop loss to break even. They just don't do it, and it works for them. They've backtested it. So a good way to backtest this is look at your previous 30 trades, wins and losses, and even the missed trades. If you would have not moved your stop loss and you would have kept it, you full risk, what would happen to your performance? Would you have made more profit, or would you have lost more of your balance, more of your capital? Do that. I challenge you to do that. Look at that data. This is a good way to refine your stop loss. So if you find that you're constantly getting stopped out, or you're constantly getting tagged out of a trade because you've moved your stop loss and then it goes in your favor significantly, you're leaving money on the table. You're missing out on those profits big time. So you need to really always refine the stop loss. So you need to understand your stop loss and at what point do you actually move it or not move it? You need to know this information. So number 6, how confident are you with the setup? This again is from experience. Number 7, are you in a neutral state of mind? Are you neutral? Are you too angry? Are you too excited, too positive, too negative? This is the psychological awareness. So this is a mindfulness practice that you should introduce to your trading plan. Number 8, how many scenarios have you planned for and what will you do in each? So this is something I advised earlier in the discussion. And number 9, what opposing or alternative setup and idea can you find that will negate your setup? This is again something that would lessen the impact of the cognitive biases discussed earlier. And number 10, what is your daily, weekly loss limit before you take a break from trading? I've tried different techniques in terms of dealing with potential, like dealing with, let's say, a losing streak, right? So if I'm losing too many trades in a row. So I've worked with reducing my risk. So after 3 trades in a row, I cut my risk by half. Again, another 3 trades in a row, I cut it by half again. So this is something that I've done before. Now I've changed it because of the back testing that I've done, where I just continue to trade the same monetary risk. So if it's $100 per trade that I'm risking, I continue to risk $100. And the reason I do this is because if I have a losing streak, let's say 5 trades in a row, I lose $500. Now, if I half my risk, then the next trade I'm risking $50. And if it's a winner, if it's a 3-to-1 winner, Instead of making $300, I end up making only $150. Therefore, I'm not progressing much. I'm putting more risk on my losers, yet less risk on my winners. So when I looked at the data, when I realized that in my last 30 trades, I've actually could have made more money, then I'm now risking full risk the whole way. This is just something that has worked for me. Or instead of reducing my risk, I now just take a break. So you need to know what your limit is. How much percentage or dollar amount are you going to risk until you stop trading, give yourself a break, or reduce risk? It's completely up to you. There's no right or wrong. It's just you need to know what works for you.